Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over bar area 3. This is section C8, and this is an application topic. It's to prepare journal entries to record encumbrances of state and local governments. And by the way, this is the very last blueprint task in the entire bar blueprint. So this is the last bar video that we're going to be doing for a while. There are some things that we didn't focus on as much throughout the videos where I might come back and make those in the future. But as far as for now, this is the last bar video and this is the last blueprint task in the bar blueprint. So I'm pretty excited to be finishing this. We're going to be doing this the SuperfastCPA way, just like all the other videos. And just in case you don't really know what the SuperfastCPA way is, we are going to be diving into the multiple choice questions to learn what we need to know. And if you want to learn more about SuperfastCPA, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar. In that free 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And one thing that you should know is that in today's video, we're going over 5 questions, but if you become a part of SuperfastCPA by becoming a pro member, currently that's how you get access to these videos. In the future, we will change it to where these videos are part of the access with the supplemental material, like our mini quizzes, audio notes, and review notes. But again, currently it's part of our pro course, and you can get access to the full versions of these videos if you become a pro member. What are the full versions of these videos? Well, in today's video, we're going over 5 questions, but in the full versions of the videos, usually there are double the amount of questions. So we go over 5 and then another 5 so that you can get a little bit more help and a little bit more understanding. Now with BAR, a lot of the topics have been pretty small and very straightforward to the point where there have been multiple videos where I've only made 5 questions total between member and YouTube version. But again, there's a lot of them, in fact, most of them, where you can get access to double the amount of questions if you become a part of SuperfastCPA, and you'll get more practice and more understanding. So make sure you check all of that out after you watch this. I'm excited to finish this series, however you want to call it. So let's dive into the questions now. Okay, here we are at question 1, and something I always like to point out is you want to read the last sentence of the question first. This is a very good habit, a very good strategy to have, especially for test day, because you have no idea what you're going to be seeing on the questions. So you want to read that last sentence first to give yourself context for what the question is about. Usually that last sentence is the actual question, like it's what you're supposed to actually do. So again, get in the habit of doing that. It's not 100% foolproof. Sometimes it still doesn't give you that much information, but most of the time it will be very helpful. So let's do that here. Which journal entry should the general fund record when the purchase order is issued? Let's go up to the top. The general fund of Willow Creek issued a purchase order for maintenance equipment with an estimated cost of $86,400. So again, what should the journal entry be for this purchase order being issued? Are they going to debit expenditures and credit accounts payable? Are they going to debit budgetary control and credit encumbrances? Are they going to debit encumbrances and credit budgetary control? Or is there no journal entry that's recorded until the equipment is received? Now, if you don't really know what encumbrances are at this point, that's okay. We are using these questions to learn what encumbrances are, and especially to learn some of the basic journal entries that you need to know surrounding encumbrances. So if you don't know, that's okay. We're going to use this question to learn. So let's dive into the answer right now. All right, here we are. The answer is C. You would debit encumbrances for $86,400 and you would credit budgetary control for $86,400. Let's go through this. A purchase order, just so you understand it, is a formal document sent to a vendor authorizing the purchase of specified goods or services. So basically just saying, yes, we authorize that, or we say that we are going to purchase these goods. When the general fund issues a purchase order, it records an encumbrance to show that part of its available spending authority has been committed. So they're committed to buying it for a supposed amount. They debit encumbrances for the $86,400 and they credit budgetary control for the $86,400. By the way, encumbrance accounting is used by governmental funds for budgetary control. It is not used by proprietary funds, including enterprise and internal service funds, and it's also not used by custodial funds. Encumbrances are also not recorded in the government-wide financial statements. So it's really just a governmental fund thing. So if you ever see a question that randomly is trying to trick you into saying that there's an encumbrance recorded for like a proprietary fund, that's not going to happen. Now, at the very end, the encumbrance is not yet an expenditure, and we'll talk a little bit more about that, or a liability because the equipment has not been received. So again, when it comes to governmental funds, you use encumbrances to basically say, yes, this purchase order is true and it's claiming that we're going to buy this thing for this amount. So we have set aside this money or basically committed this money to buying this thing. That's essentially what an encumbrance is, and that's the basic journal entry for it. Now let's go to the next question to learn a little bit more. All right, here we are at question 2. At which point would a governmental fund generally record an encumbrance for an equipment purchase? Now, based on what we saw in the previous question, you might be able to get the answer for this one, but let's go through it. When the governing body approves the appropriation for equipment purchases, or is it when the governmental fund issues a purchase order to a vendor? Is it when the equipment is received from the vendor, or is it when the vendor's invoice is paid? Now again, if you were paying attention to the previous question, you probably know the answer, but I wanted to make sure that it was very clear how this works, so that's why we're doing this question. If you already know it, then let's go ahead and go to the answer. If you want, you can pause it and think about it for a second, and then when you're ready, come back, we'll look at the answer together. Okay, here we are. The answer is B. It's when the governmental fund issues a purchase order to a vendor. Again, in the previous question, that's exactly what we saw, so hopefully this wasn't too difficult. Let's understand what an encumbrance is a little bit more. An encumbrance is generally recorded when the governmental fund issues a purchase order or otherwise formally commits to acquiring goods or services. At that point, the fund has committed part of its available spending authority, even though it has not yet received the equipment. So they're committing that money to that equipment, even though they haven't received it. Approving an appropriation provides authority to spend, but does not create an encumbrance. So there is a difference between appropriations and encumbrance. Appropriation is basically kind of the bigger picture, like this is the full amount that we are authorized to use for a whole bunch of different things. Whereas encumbrance is almost like a piece of the appropriation where it's like out of the total appropriated amount, we are committing this amount to buy this thing. When the equipment is received, the applicable encumbrance is reversed, and we'll talk about that soon, and an expenditure is recorded. Paying the invoice reduces the liability and cash after the expenditure has already been recognized. But again, when it comes to encumbrance, you're not recognizing an expenditure right away. It's not the same thing as an appropriation. So with that information, let's go to the next question. All right, here we are at question 3. When the general fund reverses the encumbrance, which we just kind of talked about a little bit, which account should be credited and for what amount? Let's go up to the top. The general fund of Brookhaven issued a purchase order for office equipment estimated to cost $82,600. The entire order is subsequently received along with an invoice for $77,900, so a different amount. So when the general fund reverses the encumbrance, which account should be credited and for what amount? So what happens when the amount of the invoice, the actual invoice, is different than the encumbered amount, the estimated cost? So are you going to credit encumbrances for $77,900? Are you going to credit budgetary control for $82,600? Are you going to credit encumbrances for, it looks like the difference of $4,700? Or are you going to credit encumbrances for $82,600? How does this work? If you don't know, again, that's okay. We are using these questions to learn. If you kind of have a guess, or if you kind of already know how encumbrances work, you probably already know the answer. So let's go ahead and go to the answer to learn a little bit more. Okay, here we are. The answer is D. You would credit encumbrances for $82,600. So this is something that you need to remember because it's really not too difficult. You just need to remember that, but let's go over this so that you understand. The general fund must reverse the entire original encumbrance because the completed order or complete order was received. The reversal entry is you debit budgetary control and credit encumbrances for $82,600. Now, think about that. Probably when the initial purchase order was set aside or given, you debited encumbrances and you credited budgetary control for these same amounts. Once the order is received, it doesn't matter for how much it was received, you reverse the entire encumbrance because the whole order was received and that was all that the encumbrance was for, was just setting money aside, committing it to the purchase. Now that the purchase has been received, we reverse the entire encumbrance. The encumbrance is reversed using the original purchase price or purchase order amount, not the actual invoice amount. The general fund then records the actual cost shown on the invoice as an expenditure and liability. So there's two separate entries here, but they aren't really intertwined. You're reversing the entire encumbrance and then you have a totally new journal entry for the expenditure, because now that the good has arrived, you're actually paying for it. You debit expenditures for $77,900, credit accounts payable for $77,900. The $4,700 difference is not recorded as a separate expenditure or encumbrance adjustment. It simply means that the actual cost was lower than the amount originally committed. So don't get too confused with that. When it comes to encumbrances, it's just saying we're committing to spending this estimated amount of money, but when the actual order is received, you reverse the entire encumbrance and then you pay the actual amount that was on the invoice. So kind of two separate entries there. Reverse the encumbrance, then do the actual expenditure. Not too complicated. Let's go to the next question. All right, here we are at question 4. What amount should remain recorded as an encumbrance after these events? Let's go through this. The general fund of Pine Valley has an approved appropriation of $560,000 for public works, equipment, and supplies. During the year, the following events occurred. The fund purchased and immediately received emergency supplies costing $18,700 without first issuing a purchase order. The fund issued a purchase order for equipment estimated to cost $96,200. The equipment was later received, and an actual expenditure of $94,900 was recorded. The fund issued another purchase order for equipment costing $67,500. That equipment has not yet been received. And then finally, the fund paid a $31,800 account payable related to supplies received during the previous year. So with all those things that happened, what amount is going to remain in encumbrances afterwards? Based on everything we've learned, I think you probably can get a good guess or even just get the right answer. So I want you to pause the video, think through this, do the calculation, and when you're ready, come back, we'll look at the answer together. Okay, here we are. The answer is C, $67,500. Let's walk through this. Only the outstanding purchase order for $67,500 remains encumbered. It represents a commitment for equipment that has been ordered but not yet received. The $560,000 appropriation provides spending authority, but it is not an encumbrance, so don't get those confused. Appropriation and encumbrance are not the same thing. The encumbrance for the first equipment order was reversed when the equipment was received, and the $94,900 expenditure was recorded. So the entire encumbrance for this purchase order of the equipment is reversed because it was received. The whole order was received. So that's reversed. And then there was an expenditure. The emergency supplies were received immediately, so their $18,700 cost was recorded as an expenditure rather than an encumbrance. Because there was no purchase order, they didn't have to commit any funds prior because they just straight up used the money right away. And so it was just an expenditure right away. Paying the prior year account payable reduced the liability and cash, but did not create a current year encumbrance. Again, an encumbrance usually comes from a purchase order or something similar where you're committing money or committing a specified amount of money to buying something even though you haven't received it yet and you haven't actually paid for it yet. So that kind of was pulling together a lot of things we've learned in the previous questions. Now let's go to question 5. All right, here we are at question 5. After recording the partial receipt, what amount should remain encumbered? So this is going to be a little bit different than what we've talked about so far, but I don't think it's too difficult. The general fund of Silver Lake issues a purchase order for equipment totaling $104,500. Equipment totaling $68,200 is subsequently delivered and accepted, and the remainder of the order is still expected to be delivered. So only some of it has been delivered. This is different than what we've been talking about where the entire order has been delivered and you reverse the entire encumbrance. When it comes to partial receipt, do you still reverse the entire encumbrance? How much of the encumbrance do you reverse? That's the question. That's what we're trying to learn. So if you have an idea, if you want to give it a guess, go ahead and pause the video. And when you're ready, come back. We'll look at the answer together. Okay, here we are. The answer is B, $36,300. That's the amount that's still encumbered. So let's go through this. Because only $68,200 of the order has been received, the general fund reverses that portion of the original encumbrance. So they reverse it by doing a debit to budgetary control and a credit to encumbrances for that $68,200. The received equipment is also recorded as an expenditure and a liability. So they have that debit to expenditures and that credit for accounts payable. The remainder of the purchase order is still outstanding. They're still expecting to receive the rest of the purchase order. So you take the original $104,500 of encumbrance, subtract the $68,200 received, and that leaves you with $36,300 of remaining encumbrance. The $36,000 remains encumbered because the government still expects to receive the rest of the order. If the remaining order were canceled, the amount would also be reversed. It would be completely reversed. It was canceled. Or, like we've learned, if they finally received the rest of the order and the rest of the order was only worth $30,000, then they still reversed the entire $36,300, and then there would be an expenditure for $30,000. Just all that was just an example. They still reverse the entire encumbrance once the rest of the goods are received. Doesn't matter how much the rest of the goods received cost. So with that, we learned that last final piece that we needed to know for encumbrances, and that was partial receipt when it comes to encumbrances. And there can still be a leftover encumbrance after partial receipt, going into the next year or something like that. Now, we learned a lot in these 5 questions. Before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, as a reminder, the idea behind pillar topics is as you're going through the questions in your review course to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or 3 or maybe even 4 questions teaching you the exact journal entry when it comes to a purchase order. So it teaches you the journal entry for encumbrances and budgetary control and things like that. Again, it's something that you see consistently throughout the questions, the specific concepts or topics or calculations that you obviously need to know because you're seeing them over and over again in the questions. So you take a moment and you write them out in your own words so that you have pulled out the key things that you need to know based on the questions. So with that, let's go ahead and look at the pillar topics for this video. All right, here we are at the pillar topics. As a reminder, again, this is essentially a summary or the key points that you learn from the questions. So this is going to be what we were supposed to learn from the questions. So let's go through this. First, what's the purpose and use of encumbrances? Encumbrance accounting is used by governmental funds to track spending commitments, usually when a purchase order is issued. It is not used by proprietary funds, custodial funds, or in the government-wide financial statements. Next, let's talk about recording an encumbrance. When a governmental fund issues a purchase order, it debits encumbrances and credits budgetary control for the estimated purchase amount. Next, there's appropriations, encumbrances, and expenditures. We need to make sure we understand the difference there. An appropriation provides authority to spend, while an encumbrance shows that some of that authority has been committed. So encumbrance is almost a piece of appropriation, but again, it's not the same thing. An expenditure is not recorded until the goods or services are received. Remember, expenditures are almost like they're essentially an expense, just with a different name, when it comes to governmental fund accounting. Then there's reversing a completed encumbrance. When an entire order is received, the fund reverses the full original encumbrance by debiting budgetary control and crediting encumbrances. Again, they just totally reverse it. It then records the expenditure and liability at the actual amount owed. So it's 2 separate journal entries, and there's not like a journal entry for the difference between them. You just reverse the entire encumbrance, and then you record the expenditure. Now, that is a little bit different when it comes to partial receipts. Let's talk about accounting for partial receipts. When only part of an order is received, the fund reverses the encumbrance for the amount received and records that amount as an expenditure. The unreceived portion remains encumbered if it is still expected to be delivered. If the rest of it was canceled for some reason, then you reverse the rest of the encumbrance. But if you're still expecting to receive it, you keep that encumbrance until it's been fully received. So with that, again, those were the pillar topics. Those were the main things that we were supposed to know. And that is the end of the YouTube version of this video. Remember, for a lot of the BAR videos and most of the FAR and audit and reg, all the videos that I've made, most of the time there is a member version that has double the amount of questions so that you can get a little bit more help and a little bit more understanding if you become a part of SuperfastCPA. So make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar. We'll teach you the key ingredients to passing the CPA exam, and then you'll have a much better path to learning about and becoming a part of SuperfastCPA. And if you get the pro course, that's currently where the access to the full versions of these videos, like the 10-question versions of the videos, that's where that is. And that will eventually be moved to our supplemental study materials instead, just because we feel like it makes more sense to be there. But again, currently you get it through the pro course. And if you like this, make sure you check that out so that you can get access to the full versions of these videos. Today's topic was pretty straightforward and pretty simple, so I didn't feel it was necessary to do that. So it's just 5 questions for YouTube and 5 questions for the member version. But again, the member version usually has more questions. Now, I hope that you found this video helpful. If you did, make sure to like it and leave a comment in the YouTube video. That is the end of the BAR videos for now. I'll come back to them, at some point and kind of work over some of the things that I haven't touched yet. But again, this is the last blueprint task in the BAR CPA blueprint. So that's all we're doing for now. Thanks for watching all these BAR videos if you've watched them, or thanks for watching the ones that you have watched. I hope they were helpful, and I will see you in the next section.